Welcome, everybody. It's January 29th. It is cold and snowy still outside. Welcome to the Market Update Desk with Scott Riley, NMLS number 157524. Got a lot to go over today. Want to dive right into it. Yesterday, the Fed concluded its two-day meeting. They did leave rates unchanged at 3.625. Keep in mind that's the Fed funds rate, not mortgage rates, anything else. There were two dissenting members that voted, and that was Waller and Miran. Not unexpected. They did vote for a quarter point cut. Everybody else was in support for a pause. Now, the Fed did upgrade their view on the economy. That's likely due to a much stronger GDP numbers that we've been seeing, and downgraded their fears on the labor market, which honestly doesn't make a lot of sense. They said the job gains have remained low, but the unemployment rate has showed signs of stabilization. That is a very true statement. They are clearly pointing to the recent drop in unemployment rate, but it hasn't been rising for a while now. The Fed's clearly obsessed with inflation being above their quote target rate of 2%. But in the press conference, Powell explained that he expects service inflation to move lower due to housing shelter costs coming down, and that's something we've been talking about quite extensively. He thinks some of the inflation was due to temporary tariff impacts that are lessening. Now, if you remove those variables, inflation's very close to its target. He thinks the labor market will do better because of the stronger GDP, but we may not see that with an increase in productivity due to the rise in AI. Additionally, Powell even said that he thinks the labor market numbers are being overstated and that the real BLS numbers have been negative, showing job losses. Yes, we've been talking about that for a while now. We didn't expect the Fed to cut rates, but if they are looking at real-time data, which more Miran and Waller seem to be, there would be more push for a rate cut. Now, this pause didn't have much of an impact on the market. The market was expecting it. Some of the quotes or comments specifically from yesterday were, quote, "In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data and the evolving outlook and the balance of risks." That's them, talking about following the data, but which data are they actually following? That's always the question. Another is available indicators suggest the economic activity has been expanding at a solid pace. Job gains have remained low, and unemployment rate has shown some signs of stabilization. Kind of goes into what some of the comments were there. Futures markets now are pricing in two rate cuts for 26 and none for 27. That's regardless of who the next Fed chair is going to be. Now, the prediction markets are pointing towards BlackRock's chief Rick Rieder as the likely candidate to succeed Powell. That's definitely changed from what we've been seeing with a couple of the other candidates. Now, another thing came out this morning was following a month of the trade deficits hitting the lowest level since early 2009, it shot up 56.8 billion. That's an increase of 94.6% from October. Of that gain, about 1/3 came from the EU, where the goods deficit rose by 8.2 billion. The goods deficit with China decreased by about $1 billion to 13.9 billion. So definitely a sharp change in the import-export market. Something we're watching as it relates to geopolitical, inflation, cost to consumers is U.S. crude oil. It rose $1.56 or 2.5% to $64.77 a barrel. Global benchmark Brent crude was up 1.5 or $1.59 or 2.3%. Now we're watching these very carefully because this definitely could have downstream effects on inflation numbers. Earnings season has rolled onto us yet again. In the news last night, this morning, pre market, Meta jumped 9% on stronger than expected Q1 sales forecast and beat on both the top and bottom line numbers. Here's a staggering number. They're expecting to spend between 115 and 135 billion dollars on AI cap investment. It's a staggering number. Tesla climbed 2% on better than expected results. Also, what's interesting with Tesla is they're going to start to remove two of their models, I think the S and X, if I'm not mistaken, and dedicate that production area to robots. So we're going to start to see a definite change in there. That could be a huge move for Tesla. Microsoft, boy, they were the loser in this, specifically within the Mag 7 category. They fell 6% on news cloud growth slowed and issued soft guidance on operating margins for their fiscal Q3. Globally, we saw India is targeting a 7.2% economic growth for next year. That's a big jump for them. Positive news, apartment lists came out with their newest rent numbers, showed continued deceleration. January was a drop of 0.2%, and year over year down negative 1.4% in new rents. This should continue the forward movement within shelter cost of getting smaller, which will help us on both CPI and PCE inflation numbers. Q3 productivity was up again 4.9%. That was on a big increase from the previous report also. Unit labor costs, partly due to the productivity, dropped 1.9% for employers. Initial jobless claims dropped 1%. Dropped 1,000, and continuing claims dropped 38,000. It's been a low point for a while now on this number, 1.827 million on continuing claims. Could be from they're falling off the continuing claims rolls and finding what we talked about the other day, some e-gig work, but many of those have not found new long-term employment. 10-year Treasury still being challenged. We keep fighting numbers on that, and resistance levels. Looks like we're at 4.227 this morning. 4.229 is our top resistance. 4.17 is our bottom resistance right now. Maybe we can get some mojo, start bringing that down, help us again with mortgage rates. That's a breakdown of what's going on today. It was quite a bit. Give us a call. We can answer any questions on that, help get you pre-approved for a new mortgage, whether it's a refinance or a purchase, explain the loan programs and what is going on with the market and how to see what's going to be coming down the road. 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Stay warm, everybody. It has not been a pleasant January.